Hi there, welcome back to our channel. My name is Robert Wolf. I am the CEO and founder of Terra Firma Business and Financial Consultants, and our channel is geared to you as a small business owner. Our focus here is to really go through articles, topics, information that is out there in the marketplace that our politicians and that the mainstream media, what they're saying, and what our goal is to read between the lines, really translate what they're saying to what that means to you and I as small business owners. And we focus on 5 areas, and then you can see my book back here, Economic Termites, talks about taxes, inflation, time, laws and regulations, and debt. Those are the 5 economic termites that deteriorate and destroy our wealth. The most detrimental is, of course, laws and regulations, our politicians, and we're seeing that in true form here over the last couple years. Beyond that, but specifically last couple years, their decisions are affecting all of us. Their decisions to, back in 2008 with the financial crisis, to bail out banks and to create quantitative easing and to use these financial structures since we no longer have the backing of the gold standard. It's just kind of up in thin air, and the Fed is in control over that. The Fed's goal for inflation is 2% a year. So that means, with using the rule of 72, that in 36 years, your money is worth less. Every 36 years, your money is worth less. And so that causes that a 2% goal, some issues, that the devaluing of our currency. Now, the other things that we look at when we're talking about this is the money inflow. Quantitative easing was money inflow. The Fed and the government putting money into the marketplace to make money cheaper, to allow us to use those dollars to create more goods and services and to expand an economy. When the economy expands too much, they use interest rates to slow that down, so money becomes more costly. So interest rates are a big tool, so to speak. So here's the issue: is part of the issue is that for some reason, the government buys our mortgage debts, they buy our student loan debts, and so we as taxpayers are holding that debt. Now, you can make the argument that I'm not responsible for it as a taxpayer, but you are. You pay taxes, and the government pays for their expenses utilizing taxes. And so I don't need to go through how all of this works, but I think it's important to summarize really quickly. The reason is because today's topic is we're going to talk about inflation. Taxes, inflation, time, laws and regulations, and debt. All 5 of these work in unison to eat away at our wealth, your wealth. And so that's the key here, is when you look at termites, it's not just one termite, right? It's a colony. They're all working well together, and we have a colony of 5. And so as laws and regulations are changing, it affects inflation, affects taxes. Now, I've done a couple other videos on how inflation is a tax, because what happens with inflation, as we well know, the cost of goods become more expensive. Well, it becomes more difficult for you and I to afford the basics. And so what do? We have to change jobs or ask for a raise. As a business owner, you got to raise prices. And that's what causes inflation to go. There's 2 types of inflation. We'll talk about that with an infograph here in a few minutes. So that becomes a big deal. So if you and I, guess what, say, hey, I'm going to switch jobs, or, I'm going to raise prices to increase revenue, to increase income, well, guess what is taxed? Income. So inflation is driving up, and it's causing our income to increase, which drives up our taxation. So those are just 2 scenarios. Now, the more this happens, the less time I have to save for retirement, because now I have less money. And so that's where time comes into play with this whole thing. So our lawmakers make decisions that causes taxes and inflations to increase and reduce our wealth, which reduces the time or increases the time that we are able to save money and hit that holy grail of what we consider retirement. Now, in my opinion, I think retirement is just a bunch of gobbledygook for people who just don't like doing what they decided to do 20, 30 years ago or whatever. And I get that. I'm not saying that you don't have the choice to do that. But to go through this mentality, retirement is really designed to increase banks and insurance companies, and really those that stocks, bonds, mutual funds, those types of investment banks as well. Why? Because they're telling us you and I have to save all this money, so I need $1.4 million to live comfortably. And then they tell us how we're able to take money out to replace all of our income at retirement. And guess what? Now you're not working, you're not creating your own income, and so you have to draw down your savings. And that's going to be taxed, right? So I mean, there's a big picture. We're not trying to solve the big picture here with this particular video, but I want to summarize so everybody understands that it is a push-pull scenario. Everything is a push-pull. Everything within our economy, everything within those economic termites. Now, if you're holding debt and inflation goes up or money goes up, interest rates go up, and that causes debt to become more expensive, which means we have less money to go buy assets or invest in our business and machinery or whatever the case may be. So there's a lot of push-pull within this situation. So I want to focus on this, and the reason why I was summarizing is because the decisions that have been made over the last couple of years, and we're not going to drive into the politics of this, but the reality is the use of what's going on to drive up control and power of the economy or the world or citizens has been very, very obvious. And so what my concern is, and has been, the moment that the CARES Act was passed, I started talking about inflation's going to go up. A year later, it started creeping up. And now we're 2 years later, and we're starting to see 40-year history going on. Last time inflation was this high was back in the early 80s. Well, what happened in the late 70s, early 80s? We had double-digit inflation. Okay? So guess what? Now, there was a bunch of things going on. We were just coming off the gold standard. There's a few decisions that were being made. And I think from a government perspective, an economic perspective, the government didn't know how to utilize the tools they had. And so they were able to correct that. Now it's a completely different system. And so, 40 years to the future, to our present day, now we have some issues. So I'm going to minimize this, and let's go through this article here. Inflation, the items that are getting more expensive and those that aren't. Okay. Now, the key here is that one of the things that we were talking about is food and energy are what's really causing the CPI to increase. Well, now I kind of have to look at this and say, well, food we need, right? That helps us survive. We need energy to process and bring food from farm to market, so to speak. And so we're looking at a 7.5% annual gain, okay, of inflation. Now, this is the fastest since 1982. This figure came in higher than the Dow Jones estimate, which predicted a 7.2%, okay? Either way, 7.2, 7.5, it's 7%. It's over 7%. It's a substantial amount. Even though prices rose overall, a closer look at the report shows that increases were not equally distributed throughout all sectors, which is normal. So they're acting like that this is a unique thing. That's normal. And because of certain supplies and demand. So let's focus on food and energy price increases, a broad base across the consumer price basket, so to speak, from Comerica Bank's chief economist, Bill Adams. Now, here's the thing. Energy prices experienced the largest percentage gain out of all sectors. Total energy prices rose 27% year over year. Now, here is why. Okay, they're gonna want to blame supply chain issues. They're gonna want to blame Ukraine, Russia. They're gonna want to blame China, Taiwan. They're gonna want to blame everything other than themselves. The moment the current administration took power in office, what did they do? They took us from the number one producer of energy, and they just shut down that. So now we have to import from elsewhere, which causes what? It causes the prices go up. We saw that in the Obama administration and previous to that. So the more we produce here in the U.S., the more we are reliant on ourselves and less reliant on other countries, which means that their costs are less, which means the cost of energy goes down, which means that you have businesses and companies generating and increasing profits, which means you and I as employees or business owners are generating more income. We can put more into savings. You get the trickle down effect, okay, these decisions. So do not allow them to utilize political international issues like Russia and Ukraine or China, Taiwan. Those have been going on for decades. It's not a new issue, okay? That's not causing prices to go up. It's the administration's initial decisions to not make us a priority, make us, the United States, but they want to put trillions of dollars into a Build Back Better bill, okay? That is not designed to do what? Allow us to grow, okay? So in my previous video, when we were talking about, we watched a video on charging stations. The United States, the government, the current administration wants to build charging stations all over the United States. Well, guess what? You could do that if you had more money because we're producing it. But instead, what they're doing is printing more money. They're gonna use our taxpayer dollars to put that into effect. And the reality is, the majority of people who use these electric cars are in highly dense. Go check out our other video that talks about that. So let's go back into here. Oil price ran up 9.5% during the month as part of a 46% year over year. Okay, let's look at this. 46% increase. Okay? That is criminal. That is criminal. Because as a small business owner, if you're a manufacturing company or you're a restaurant, the cost of the things that you guys need to buy, the cost of goods to produce a widget or whatever your product is or what you're providing consumers, that has to go up. I've got a friend who owns a HVAC company, and they're seeing increases in air conditioning units that are astronomical. You can blame supply chain issues, you can blame COVID all you want, but at the end of the day, these were political decisions that are affecting that. So it's a big, big issue. Besides their gas for their vans, their insurance is going up, their gas is going up, workers need more money, insurance is going to go up because your payroll goes up, right? You see how this all affects, okay? Now, while in total prices across the sector rose only 0.6% in January, seasonally adjusted food and used vehicle prices increase drove much of the non-energy price inflation. Food prices rose by 0.9% in January, representing a 7% increase over the last 12 months, okay? 7%. While used vehicles rose 1.5% last month, but still a 40% increase year over year. Okay? Medical care commodities experienced a similar high level of inflation, increasing 0.9% on the month and 1.4% on the year. Clothing and apparel 1.1% during the month and up 5.3%. Okay? Increasing new vehicle prices remained at 1.2%. Now, additionally, shelter prices rose 0.3%, representing the second consecutive month of decelerating inflation in the sector. Gasoline prices actually declined nationally by 0.8%, while utility pipe gas services fell by 0.5%. So, gas prices fell. I don't know. Go to the gas pump. You tell me if that's really what happened. Now, despite some cooling in gas prices and utility services, inflation continues to exceed Fed targets. Okay? Again, Fed is 2% target. So yes, with oil prices rising precipitously in response to concerns with Russia and actions towards Ukraine, no, thank you very much. Our price of gas and oil went up when this current administration took office. Let's see here. The Fed previously signaled that they will take a more aggressive approach in combating inflation, which means what? Which means that if they increase interest rates, which they're talking about increasing them 4 times, typically when the Fed increases interest rates, it's a quarter point. It's called 25 basis points or a quarter point. So that's typically what they're doing. They're looking to do that 4 times. Well, they've tried that over the last 10 years, and the market's affected. Now, again, we're in a way worse situation now than we were previously. We had growth, but inflation was still controlled, which is why they really didn't need to use interest rates to combat that. Interest rates were still fairly low. Today, though, they're going to use interest rates. They're going to increase interest rates, let's say at 1%. Okay. Now, tell me what the cost of all the CARES Act, the Build Back Better, all these different bills, the $4 trillion that they've put into the marketplace and into the economy over the last 2 years. Tell me what that debt's going to cost now. It's going to cost more. Interest rates go up. The cost of debt goes up. Okay. So our taxpayers will have to pay more for the debt that the government is utilizing just to service that debt. If interest rates on your credit cards go up, what happens to your payment? Goes up. If the interest rate on your mortgage or your house goes up, what happens to your payments? Goes up. It's not rocket science, right? We know this. So this is very detrimental for us. Let's see here. The Fed previously signaled that they will take a more aggressive approach in combating inflation. In a press release a few hours after the Bureau of Labor Statistics published the CPI numbers, President Biden acknowledged the nagging elevated price inflation report while emphasizing positive wage growth and projections that inflation would ease substantially by the end of 2022. How's that? We just talked about the reason why wages go up is because people can't afford goods. They're shifting. And people don't want to work. So you have to offer more money to entice people to come to work. So that's causing inflation to go up too, because a restaurant trying to get one more server or one more busboy or one more cook or whatever has to offer more money than normal, which causes the price of its food to go up, what it's serving. So you and I as consumers are paying more money. Okay? So it's all connected. While inflation continues to overshoot the Fed's target in January, this is the third time they've said that, fundamental drivers of inflation are starting to improve. Remember, a big part of the surge in prices was from shortages, and the economy is making big strides in reducing shortages. That was a part of it. I would not say it was a big part of it. Okay? I would say it's a part of it. Which is a result, shortages are a result of the current administration's approach of how to run an economy. Businesses made a huge inventory build in the fourth quarter of last year, which shows the businesses continue to grow inventories, which is interesting because, as you know, as a business owner, I don't know what what you do and offer. One of the controlling factors is keeping inventory low. That's the point of technology, and that's the point of utilizing technology and on-demand type processes. So if we're building up inventory now, and I have again my friend who has a HVAC company, he's buying certain units that are more popular when he has access to them, he's buying them. Now the supply houses are only allowing these guys to buy a certain amount as well. So, but he's inventorying these because he may not get them in a week, may not have access to them a week, so he can't do his job. He can't provide services to his clients. So, anyways, I'm not going to labor this. You get the idea. For you and I as business owners, what do? Well, the best way to combat this is that in our own business and our own desire to grow our own wealth and try to figure out how do we be financially fiscal in our own businesses, we need to focus on tax planning strategies. We need to focus on the ways that we can combat those economic termites to help grow and build your wealth. And so you're welcome to reach out to us, add a comment down below, give us a thumbs up if you liked what you heard. Comments down below, give us some ideas and thoughts of what you'd want to see some videos on, our opinion of how things are going in certain areas. We'd love to do that. Feel free to subscribe if you hadn't, and feel free to share our channel with other business owners that you know that are looking for a little more information about what we need to do. The key here for you is you need to worry about tax planning. You need to worry about looking at ways to reduce those costs so that those taxes that normally go out can be used as cash flow in your business to help grow your business. And we'd be happy to direct you and assist you in those areas. But at the end of the day, these economic termites are what we got to combat, and we got to work together in doing this. So thanks so much. My name is Robert Wolf, and I look forward to having a conversation with you. Thanks you. Bye.